Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Before we get into our intrigue, holy cow, I got a little feedback here, guys. Before we get into our intriguing content today, please join me in welcoming our featured guest. Kris Murray is with us, Anaheim City Councilwoman. Welcome.
Good morning, Ron. Great to join you as always.
Glad to have you with us.
Everybody who's listening.
Glad to have you with us. Let me remind you, if you ever have any more finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it, and my board is sleeping.
Quiet, numbskulls, I'm broadcasting.
There we are. Amazing. You know, you get all these things going on, and every once in a while, live radio, you end up going in the wrong direction at the wrong time, but we get there. Do have a great team when it comes to developing a financing plan or plan to save you money. I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. As we do every morning, we start every broadcast out with a little bit of celebrating time. I always like to look, especially when we're broadcasting on a Friday morning, you get to look forward and see, what are we going to celebrate over the weekend? Because, you know me, if you can have a good time, why not have a good time? So let's check it out, see what's on the docket for this weekend, being that we are on... well, you look at some of the good... There's some good stuff in here. Tomorrow is Whiskey Sour Day. I think I'll probably just stick with my martini, but let's see. What else do we have going on here? National Peach Pie Day is today. National Waffle Day. I don't know if you're going to have a waffle with that peach pie or not. I don't know why we would celebrate National Maryland Day. We'll just get rid of that one. Let's move right along. Tomorrow we've got Park Service Founders Day, Whiskey Sour Day, Kiss and Make Up Day. I guess that's before or after the Whiskey Sour. I don't know. Banana Split Day. We'll just, that's enough celebrating. Let's look and see what the markets are doing right now. What are they doing? Why are they doing it? The big reason the why is more important than the what, because we're seeing a lot of news coming across right now, especially if you read between the lines. And yes, I do like to read between the lines. What is happening in Jackson Hole, Wyoming? That's the most important news for the financial markets right now. Jackson Hole, that is where the Federal Reserve, a lot of Fed folks are speaking there in Jackson Hole today. And yesterday in the meetings, the Federal Reserve Chairman will be speaking today. But if you are looking at buying a house, maybe you've already got a house, I'm going to share with you that you better act quickly, because interest rates, they are going up. Yeah, they're going to continue going up. Why would I say that they're going up? And there's not a whole lot of question about it. Because the Federal Reserve is worried. Now, they say we're basically at full employment. They say we're at their target number for inflation, yet the monetary policy is still what they call accommodative. Now, why would they care then if the economy is going well and you've got what they term full employment, what they term the target rate of inflation? Why would they raise rates to try and slow those things down? Well, the answer to the question is very simple. They're worried that things might change and then they won't have anything to do. I don't get it, but that's kind of what their philosophy is.
Ridiculous.
Yeah, a little ridiculous, isn't it? So what they're saying now, they've got the double-barreled shotgun going at us right now. Remember this: as they raise interest rates and they cut back on the purchase or repurchase of bonds that they've been buying right along, yeah, that acts as a double issue right there. So be careful of those concepts, right? So they're talking about they're going to raise interest rates. It's almost a sure thing in September that they will raise the discount rate. almost a sure thing that in December they will raise the discount rate again. That means we'll be looking at about a 5.5% rate on prime rate by the end of the year. 5.5% at the end of the year. So if you have adjustable credit card debt, it's going to affect that. If you have a home equity line of credit, that will be affected. Those are all based on those numbers. The idea then will be that the economy will slow down a bit, and we'll see what happens, because right now nothing else seems to be affecting the economy. Dow Jones Industrial Average, as I speak right now, up 166.91. Oil up 125 a barrel. We are not going to get into what that means in Taxifornia for how much we're paying for gasoline, so we're not going to talk about that. We'll talk about that maybe a little bit later. I am also looking at the bonds. What is happening with the bonds? So the Fannie Mae 30-year bond up. That means that interest rate is down a little bit, but we've got a flattening yield curve. Technical term for recession is on the horizon. Now, just think about that concept, because the one thing that the economists will tell you, and yes, I have listened and I did study over at our local university, one of the best economic schools in the country, right here in Orange County, Chapman University, right? So we did study over there, and one of the things that does precede nearly every, and I think it might even be every recession, is an inverted yield curve. That means the short-term rates are higher than the long-term rates. Well, if the Federal Reserve keeps pushing up short-term rates, and we're already only looking at less than 0.25% difference between the 2-year Treasury and the 10-year Treasury, well, we're pretty much there. Now, right now, I'm looking at the 10-year Treasury. It's at 2.82. I told you last week when it was at almost 3 that I am anticipating the 10-year Treasury to go down to 2.75, maybe 2.76 before we see what's going to happen there. And we have also talked with you about the idea of where the mortgage market is going and what I'm going to seeing in the Fannie Mae 30-year bond, right? And we've talked about that one as well. So we're going to continue those conversations over the days and weeks ahead. But you need to just understand what is happening, why it's happening, because you can go on and look on the websites for all the same data that I look at, right? You can see what the S&P 500 index is, 2874.57, as I speak to you right now. That's easy. Anybody can do that. The idea is the why. Why is it happening? What's causing these things to happen? You hear in the news, and this is one of the areas that I like to bring up all the time, because you get a lot of fake news out there that the world is coming to an end because of all of these trade talks with China. Well, China increased their tariffs by $16 billion last night, tit for tat, because we did increase ours the day before, right? And has it had any effect on the stock market? No. Now, remember, the stock market is always a forward-leaning device, right? So it's basically predicting what's going to happen 6 months from now. When you see the market start dropping, it's saying, hey, something business isn't looking good down the road. So these are just a few of the items that are going on in the scene, behind the scenes, as to what's happening. So when you hear that the world's coming to an end because of trade tariffs, well, apparently the business sector, they don't think so. And they're the ones that are out there going to be putting money into capital goods, capital expenditures, durable orders. So what's happening with durable orders? Well, today's economic news, durable orders are down 1.7% in July, worse than expected. They only expected to be down 0.8%, so that might not be a good issue. You take out the transportation, orders are up 0.2%, which was also lower than the 0.5% gain. So just watching what the market is doing. Now, we're going to also be seeing, I haven't got all the reports, I did see some of the preliminary reports that Jerome Powell, the Federal Reserve Chairman, would be speaking today. So we're going to be looking and following what he has to say. Generally, whenever the Federal Reserve Chairman speaks, yeah, the market listens. One word of caution in the world of investing: never fight the Fed. I mean, when you really think about it, nobody has more power than the Federal Reserve. I'm one that really wonders how in the world we have a Federal Reserve that is the way it is in our country. There are a Federal Reserve chairman and 7 or 8 people that are voting members who have the authority to spend trillions of dollars. They've got a blank checkbook, and they answer basically to nobody. I mean, look what they spent during the crisis. They spent trillions and trillions. They tripled their balance sheet. Now, could you imagine going out and tripling your balance sheet and not having to answer to anybody at any time? Oh yeah, we did that in 2007. What happened in 2008? Right? It doesn't work very well. Now they're trying to bring that back down, and we all are going to be feeling that because nobody has ever done this before. So as nobody's done it, they're treading on thin ice because they've got a balancing act. Are they going to help continue with the economy going the way it is? Or are they going to be the contrarian? And are they going to be the cause that maybe our economy slides in the other direction? Who knows? We just don't know those answers. I believe that we're going to still see the stock market continue to grow. I shared that with you earlier, that there's way too many positives in the market right now for the stock market not to continue on its growth pattern. But we also have a lot of uncertainty in the political environment. Markets do not like uncertainty. They like to be I was going to say sane, but anytime you talk about politics, I don't think you can ever put the word sane and politics in the same sentence. It just doesn't seem to work out. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, on our social media channels, we have seen a tremendous amount of debate about the hotel taxes, with what's going on with Disneyland, what's going on in the resort area, with what's going on the minimum wage issues. A lot of that's been going on recently. Well, we're going to get the first-hand commentary on what's going on there. Kris Murray is with us. We're going to spend the rest of the hour chatting with Kris. What does a recent rash of price reductions mean to real estate market? There are only a couple of reasons why you want to collect Social Security at age 62. I will talk about that, and obviously we talk about the Mortgage Minute every day. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio. On Twitter, at Ron Siegel. Stay tuned. We'll be back in just a few.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Did you know that banks and credit bureaus are rewarded financially if you have bad credit? And the worse your credit score is, the more money they can make off of you? How does that make you feel, knowing that banks are getting rich off of your hard-earned money? How does it make you feel, knowing that if a bank or a credit bureau makes a mistake on your credit report, they benefit from it and it hurts you? The Fair Credit Report Act of 1971 requires banks and credit bureaus to report only accurate information, and nearly 100% of all credit reports are inaccurate. If you're sick and tired of being broke and tired of being robbed by the banks, you owe it to yourself and to your family to call Rondi. Rondi is a FICO-certified credit professional and has helped thousands of people just like you get out of debt and establish great credit. Rondi's number is 855-608-1990. Again, that's 855-608-1990. Or visit creditsanitizer.com. Again, that website is creditsanitizer.com.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you a veteran, police officer, firefighter, doctor, nurse, or teacher? If so, you qualify as one of Ron Siegel's VIP heroes, and we have rewards up to $5,000 or $10,000 when you buy, sell, or refinance a home with one of the Ron Siegel radio partners. As one of the heroes, real estate agents will rebate part of their commission, lending partners will give a credit at closing, the title company has special published rates, and many other service providers have incentives too. All you need to do is call Ron Siegel Radio at 1-800-306-1990. That's 1-800-306-1990. Or visit VIPHeroProgram.com. Just think about what you will do with all the rebates and incentives from the partners of Ron Siegel Radio. Just call us at 800-306-1990 so we can show you our appreciation for your service.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message. And as your consumer advocate, I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990. The Mortgage Minute today being brought to you by our friends over at Gold Star Mortgage. When you're ready for that next mortgage, Gold Star is the only one that I know of with the Fast Pass loan approval. They allow you to compete with the same as cash offers, even though you may not have enough cash to buy your home for cash. That's Gold Star. So we are looking at the markets. I do that on a regular basis for you. Looking at the Dow Jones Industrial Average, as I mentioned before, it is still on an upward ascent. Looking at that at 155 up right now, 156 as I speak. Then we look over at the rates. We're looking at the 10-year Treasury down just ever so slightly, not enough to talk about. Let's look over and see even further what's going on in the mortgage market, because that's where we look and find the Fannie Mae 30-year bond. That's the one that we watch for mortgage rates. No matter what anybody tells you, mortgage rates always go from the 30-year bond. That bond is up right now, which means interest rates down slightly. I'm going to suggest to you that we'll probably keep going down a little bit. The big issues, though, the why of these things happening has to do with the Chinese trade talks that ended officially yesterday. They didn't have any major developments. They didn't expect any. But we did see $16 billion worth of tariffs added from each side. So I guess that's a wash. But in our economy, $16 billion is probably a lot smaller number than in their economy because we have a bigger economy. The durable goods orders measures, that one there was not a good report this morning. Q3 GDP forecast should get lifted as core shipments exceeded the estimate by 0.6. That's a huge jump. We are watching the Federal Reserve. We've been talking about that a little bit this morning. Near full employment, inflation near 2% target. So the Federal Reserve will continue increasing those interest rates. 5.5 is the projection that I'm going to tell you about right now for prime rate by the time we get to the end of the year, and we'll continue watching these. Might be a great time for you to act if you're thinking about getting rid of that home equity line of credit, if you've got the equity to do it right now. That's the Mortgage Minute, brought to you by our friends at Gold Star Mortgage, the only one I know of with the Fast Pass loan approval. So let's get into the conversation today. I've been waiting for this. Love the opportunity, because one of the doing a morning radio show or a daily radio show, I get the opportunity to learn, right? Because I'm a simple guy, so I look at certain things and I say, something, what's going on? And I just like simplicity. So when I get the opportunity to speak to somebody who really understands what's going on from a ground roots level, Kris Murray, I'm glad to have you with us so we can all figure out what the heck's going on in Anaheim.
Thanks, Ron. Great to be here.
So I look at minimum wage, and it hits home to me. I've got a son that works and probably, he's basically a minimum wage worker. He's got his challenges, and I watched, and when the state minimum wage went up, his hours diminished at work, right? And you see that happening, and now we look and we hear the unions that really don't care too much about people. They just care about statistics, and I don't know what the unions do for the most part. I got to be careful because sometimes they listen, right? But now they're pushing for this minimum wage in Anaheim to try and put even more businesses, in my opinion, out of business. Is that what is the effect? What are we looking at? I mean, with this whole, what's the truth behind this minimum wage issue?
Well, first I would say that not all unions support this. The building trades and others who stand to reap the benefits of these hotels and construction jobs, and many of the unions at Disney do not support this and have negotiated in good faith at the bargaining table. This is just a couple of unions that have not negotiated in good faith and are now wanting Anaheim residents to do the work for them at the ballot box. That being said, they are now proposing the highest minimum wage on Anaheim businesses, large and small. This is not just about Disney. In fact, as of Disney's most recent announcement, which we can talk about in a moment, it won't even apply to the Disney parks or their hotels. So this
whole thing that we've been hearing about that's all Disney is really not going to affect Disney.
It won't apply to them. But it will capture hundreds, if not thousands, of small, medium, and other businesses in the city of Anaheim who will have to pay not only $18 an hour, but indefinitely a 2% or higher, if CPI is higher, annual increase forevermore. So it will truly keep Anaheim at the highest level, the highest minimum wage for entry-level jobs of any other city in the country. It will disadvantage our businesses. They will easily move to Garden Grove, Stanton. Not easily. It will cost them dearly to give up investments they've made here, but why would you stay here and pay those exorbitant fees when you could be in Garden Grove, Stanton, or Buena Park, or any other city in Orange County and still have access to the resort community and not pay those fees, not pay those entry-level fees?
Well, is it only in the resort area, or will the other areas of the flatlands or the hills, will they be affected by that?
Well, and here's where it gets into the trickiness of it. It was very poorly written, and it was very broadly written, and it was done purposefully because they submitted two different versions, so they never clarified in either version. It will ultimately be up to the courts to decide how broad it is, but we do know one of its funders, the SEIU, has been quoted in the LA Times saying they expect it to impact all businesses in Anaheim, not just the resort. The language says within the resort or adjacent to the resort. Adjacent's not defined. They don't say 100 feet, they're only 1,000 feet, they don't say 2 miles, they say adjacent. Look it up in the dictionary, that just means nearby. Any court in California could interpret that, if they so choose, as being any city in Anaheim that receives any incentive or subsidy. But you have to understand that a subsidy is also broadly defined in this, and that can be property tax, sales tax, permit reductions, it just goes on and on and on. So ultimately, we're going to be waiting on the courts to define how broad this is.
So does that mean we won't have, even if it passes, it won't go into effect for years and years to come?
No, it'll go into effect immediately, and immediately all of the businesses in the resort area that are receiving any kind of incentive-based assistance will be affected. But the language also says that any employee, whether as an individual or part of a class action, can sue to have this wage apply for them, and therefore you can just imagine the long line of suits that will start lining up to try and expand it as quickly as possible.
Holy cow, so it seems like, not just businesses relating to the resort, not in tourism, are going to be affected. I mean, if you've got a business that's right off the 91 freeway in Harbor Boulevard, that's pretty nearby.
Yeah, please, I'm urging residents to read the language. The language very clearly says either a business that receives these benefits or, here's the fun part, a contractor, subcontractor, lessee, lessor, or, here's another, this amorphous word, affiliate, undefined. So is that a nonprofit who has an arrangement? Is that, who knows how broad this could be interpreted? If you're affiliated in any way with any of the above, it could apply to you.
Holy cow, so you wonder, I look at this report all the time that's on one of my favorite websites, How Money Walks, and it always talks about money leaving the state of California and how much money is leaving California. I don't think they break it down small enough to look at what cities are, but you would think that would really start getting a lot of money, would just say, why do we even want to bother?
Well, Anaheim has, for decades, nearly 7 decades of economic policy, generated the lion's share of its general fund revenue through investments in private enterprise, whether it's through the resort area, the convention center, our stadiums, the new packing district. People are investing, and then through sales and largely bed taxes and TOT, or transit occupancy tax. That's your visitor tax they pay when they stay a night in a hotel. That is the lion's share of our revenue. If we have this measure passed, this highest minimum wage in the nation, you will see a decrease. And it's happened in every community where these minimum wages pass, and now Anaheim will have the highest in the entire nation. Will be higher than LA and San Francisco, Seattle, that's lost over 5,000 jobs, higher than all the above. Will be right here in Anaheim. You can almost feel the economy start retracting viscerally. So it will have an impact on jobs. And who does that impact the most? Those people looking for those entry-level jobs and pathways into careers. Their options here at home will be limited and reduced.
And that's the big issue right there, is some of these jobs, I mean, even at $18 an hour, you can't live in Anaheim for $18 an hour. That's $36,000 a year when you just do the math real quick, and I'm a simple guy, right? So $36,000 a year, that's not a living wage. So just think about it from a logical standpoint. Why don't we just raise this up to about $30 an hour? That way you get $60,000 a year. 2 incomes, you could probably live in Anaheim for that. What do you think $30 an hour would do to business from an entry level? You know, maybe go to work for McDonald's or go to work for a 7-Eleven and get $30 an hour. It sounds outrageous, but I'm just simple, right? So I say if 18 is good, 30 must be better, right? Think about that. We're going to talk more about that. I was watching a town hall the other night, and I couldn't hear it because I was on the road, but one of the candidates in Anaheim, I think, was talking about $267 million that's going to go into the general fund. I want to see how that works. We're going to talk to Kris Murray about that one when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. Think about that. I mean, $267 million. If it's true, that would be great. I have my doubts, so we're going to talk about it.
The farthest thing from the truth, so it's hard not to laugh out loud.
Exactly. What does a recent rash of price reductions mean to the real estate market, and the only reasons you want to collect Social Security at age 62? All that and more. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us. Facebook.com/Ron Siegel Radio, on Twitter at Ron Siegel. Stay tuned. We'll be back in just a few.
Siegel Lending Team offers you buying power. Let's say you can afford a monthly mortgage payment, including principal and interest, of around $1,900. With today's rate on a 30-year fixed mortgage of 3.75%, APR 3.85%, that payment could support a $416,000 mortgage. But if you wait and rates tick up to around 6.5%, which is roughly the average home mortgage rate over the past 30 years, that same $1,900 mortgage payment, including principal and interest, may only be able to support a $314,000 mortgage. That's over $100,000 worth of home you're missing out on by waiting. That's buying power. All you need to do to get started is reach out to the Siegel Lending Team at 800-306-1990. That's 800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Payment example excludes taxes and insurance. Call us for full details. 800-306-1990. That's 800-306-1990 or SiegelLendingTeam.com. Equal housing lender. Licensed under NMLS number 217037.
Are you purchasing or own a luxury home? If you're like so many others, your home is your largest asset and the mortgage is your largest debt. The Siegel Lending Team has some amazing financing opportunities right now. Jumbo loans up to $2 million, 30-year rates below 4%, 15-year rates near 3.5%, and if you can believe it, 7-year interest-only hybrids in low 3s. The Siegel Lending Team has all the options for your jumbo or second home loan requirements. Take advantage of them while you can. To learn more about all the other financing products available from the Siegel Lending Team, call 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Again, call 1-800-306-1990. Rates subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal Housing Lender.
Homeowners that are 62 and older are about to find out a great way to live a better retirement. It's called a reverse mortgage, and SLT can help you learn more. Call the Siegel Lending Team at 800-306-1990 right now to receive your free booklet with no obligation. It answers questions like how a reverse mortgage works, how much you qualify for, the ways to receive your money, and more. When you call the experts at Siegel Lending Team today, you'll learn the benefits of a government-insured reverse mortgage, how it will eliminate your monthly mortgage payments, and give you tax-free cash from the equity in your home. Here's the best part. You still own your home. Now is the best time to take control of your retirement. Call 800-306-1990. That's 800-306-1990 to get your free brochure. Call today or visit our website at SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or simply call 800-306-1990.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Well, welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio anytime at 800-306-1990, 800-306-1990. One of the fun parts about doing a radio show and hosting a radio show is that it's live, so I get to ad-lib a little bit, and I do that on a regular basis because I told you that we were going to talk about the recent rash of price reductions. Well, what I'm going to do is I'm going to actually just share that report. I'm going to tell you that the Real-Time Real Estate segment is brought to you by the area trusted real estate professionals of Ron Siegel Radio, and you can text NEST, N-E-S-T, to 79564. The report I was going to share with you is going to be on our social media channels because I would rather spend more time chatting with Kris Murray this morning because there's so much going on. And I do get this question all the time, so I am going to address it before you ask it. The question comes up, why do I focus so much on Anaheim? And the idea is I look at Anaheim as being one of the leading cities in Orange County. We've got a lot going on, and a lot of other cities in Orange County derive a lot of benefit because of what's happening in Anaheim. Have you been to the Garden Grove Convention Center lately? I haven't. I can't find it. I don't know where that one might be. And I haven't seen a big resort in Newport Beach. But somehow they both have some really, really nice hotels in both of those cities. Why do you think they're there? It's because of what happens in Anaheim. So let's focus more on what's going on in Anaheim. Kris, I should say we're speaking this morning, Kris Murray, Anaheim City Councilwoman, is with us. And the nice part, for years, Kris has been great enough to come and share with us. But right now, you don't even have a horse in the race right now. You're not running for re-election, can't run for re-election. So the information, it's not like we see on some of the candidates who are out there talking and maybe they don't know exactly what they're talking about, but they want to just get a vote. So they say, yeah, we like the $18 wage because it might get them 2 more votes. And I think, the last elections, one of the candidates won by 70 votes or something?
Yep, one who wants the $18 minimum wage in Anaheim.
So he won by 70 votes. So every vote counts. So you need to first thing you have to do is get educated. Right? Don't just go vote because it sounds like it's the right thing to do. Get educated, then go vote. And we're trying to bring you some great information. So before the break, I threw out the idea that I did watch a little bit of a town hall recently, and I saw one of the candidates talking about a $267 million going back to the city budget.
Yep.
Where's that coming from?
Thin Air.
Oh, okay.
That's pure fiction. It's a great article. I mean, it's a great novel. I would love to pick it up for a summer read, but there's just no truth to it.
Interesting. And, because I've heard that many times, and those that listen to me on a regular basis know that I'm not one of the biggest fans of the mayor of Anaheim. I don't know the man personally. I've just talked about his policies. I am not a fan. And he talked about the idea of the big bailout that was going to the Angels a few years ago, and all that money was going to now stay with the city. I don't remember seeing that.
Yeah, not only has there not been a millions of dollars in giveaway hit to the budget, our budget has been growing steadily, and we even have a 5-year growth forecast in net new revenue during the tax rebates of the hotels that were approved. But that doesn't stop some of my colleagues from going on and on and on about the giveaway. And sadly, they've even convinced candidates they've endorsed that somehow there's this big pot of money that we've been loading up into trunks of cars for hoteliers, and they've been driving off with city revenue. That just has never happened. It's never going to happen. It's all a rebate on future revenue that these hotels will generate once they're built and open. Now,
so as a simple guy, would it be fair for me, and I know that the terminology is probably not the legalese terminology, but I look at it as a joint venture.
Well, it's a joint venture or a public-private partnership. That's the term that's used a lot with public agencies that partner with the private sector to basically extend tax dollars. Really, the policy is about reducing the tax burden for those who are looking to invest in our community. And in a state that is one of the, if not the highest taxed for business in the country, when municipalities compete with each other to bring business in to California, period, let alone within our own city and municipal borders. And so almost every city in California, if not every single city in California, looks at how they can reduce either business costs through permitting reductions. Our friends in Garden Grove gave land and bond finance the subsidy. They put their subsidy up front to build the Great Wolf Lodge. It's been a wonderful new asset in their community, but it wasn't free. It didn't come with no partnership from the city. It was a genuine partnership between the city and the proprietors of that hotel. That's what we have done for decades in Anaheim, very successfully.
So when you talk about that partnership, isn't the idea of a partnership where both sides make more money?
Exactly. So what's interesting is our current mayor was a council member in the 90s, and in the 90s the council, including then Councilman Tate, voted unanimously to do what Garden Grove just did, which is upfront bond finance, $500 million, the largest subsidy in Anaheim's history, to build the resort area, which that area is very dilapidated, and that was a wonderful thing they did, but it had a huge investment for residents, and that we're still paying for today, a 40-year bond commitment. They were hoping to get a 10% net generation from the resort to our city revenue. So why does it matter to residents? Not only did they surpass the 10%, it's had a 900% return on investment.
That's a pretty good return. I think I'd like that in my retirement account.
Revenue to the city every year comes from the resort district in the 20 years since that deal was struck.
Say that number again. 50%
of gross revenue to the city's general fund comes from the resort area. We're 50 miles square city, 2 and change square miles generates 50% in gross revenue. If you subtract out every single dollar that the resort costs us in bond refinance payments, any kind of infrastructure, whatever, every single dollar that the resort district could possibly cost the city, they still generate in net revenue to the city between 25 and 30% of our general fund revenue.
And what is the general, roughly the total general fund?
It's about $360 million.
So 30% of 360, that sounds like about 120 million?
Yep.
Right, and there's 40,000 people in the city?
Yeah, I mean, it's significant in terms of police, sworn police officers, firefighters, parks, libraries, and Anaheim has also been reinvesting hugely in community centers, the Ponderosa Family Center, Mira Loma, new parks at Ganita Lane, and those, by the way, are all our areas that have been hardest hit economically. Something that's often missed as well, Anaheim provides more funding directly to schools, our 7 school districts and our school facilities. $5 million annually of our general fund just goes to support schools. There's no other city in Orange County that does that. All of that's being done without causing taxpayers to open their wallets. It's coming from private investment. That's why it matters to residents.
So I saw that Disney decided they're going to put a hold on the building, or I think their term that I saw was an indefinite hold on building the hotel.
Yes.
So is that going to impact some of these numbers, or how's that going to work?
Not only is it going to impact our numbers long term, in the immediate, our finance director during budget adoption in June said our 5-year growth forecast, Anaheim is a 5-year growth forecast without, again, looking at raising taxes. 10 cities in affluent Orange County are raising sales taxes not to expand services, to cover costs. Anaheim hasn't had to do that because of our resort community, so just put a pin in that thought. But without this hotel, even our 5-year growth forecast isn't a certainty any longer. But long term, there's almost $400 million over the first 30 years, and it stretches into the billions in new net revenue from just that one hotel.
How much? 400?
400 million over the first 30 years.
Wow.
Yeah.
Okay, Kris, I've got I'm a simple guy.
New net revenue, that includes giving the tax rebate for the first 20 years. That all evaporates if this hotel isn't built.
$400 million.
So when you see candidates talking about the $267 million that the tax rebate would amount to over that 20 years, again, that would be a rebate over 20 years at the highest threshold would cost, in a rebate, $267 million, our net new revenue.
I look at some of these numbers and I'm a simple guy. These numbers just make my head swim.
Well, it's also thousands of skilled construction jobs with local higher requirements that go away.
Those are minimum wage workers, right?
Well, no, those are middle income jobs with benefits that our tradespeople are traveling hundreds of miles and leaving their families to get in other states and other parts of the state, other parts of California or out of state. These would jobs that would be right here at home for them.
So those run indefinite hold.
And then thousands of middle income living wage jobs, again, represented employees that would have worked at the hotel.
It just baffles me why we don't get better information. I mean, I just do a little tiny local radio show, right? But we don't see these same type of reports. And I love the idea because if you watched our social media channels, I copied one of your posts and shared what was the Orange County Register or the LA Times didn't mention.
They refused to include any of the financial data. In fact, they said the reason we did the hotels is we just wanted a bigger portfolio of nicer hotels. Let me assure you, I would never approve a hotel project because I just want a nice, shiny new hotel in my community. It is entirely about the bottom line. And the bottom line is about keeping more money in the pockets of my residents, improving their service levels, and creating jobs and new investment in our community that funds all of those services. That's what it was about. But the Register, the LA Times, all media outlets have refused to cover the financial impacts.
So you have to wonder as a resident where you get this right information, right? The news media doesn't want to cover it. For the most part, the majority of the city council doesn't want us to know about it. You have to wonder, what is the motivation? And you always follow the money. And I'm not going to go and get myself in trouble here. I do that enough as it is, right? But you have to always wonder, what's the motivation of people trying to, in my opinion, mislead other people? We're going to talk more about that with Kris Murray when we come back. We're going to talk about all these different things that are going on in the city of Anaheim as we lead up to the elections. It's a crazy time, but we're going to do that. And I'm going to probably, guys, I'm going to get rid of the last featured segment as well, or the sponsored segment, just so you can be prepared for that. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Connect with us, Facebook.com/Ron Siegel Radio, on Twitter @Ron Siegel. Stay tuned. We'll be back in just a few.
Are you living in the home of your dreams, or simply where you think you can afford? Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Most businesses struggle to get the online reviews they need to get a competitive edge over their competition. Rex is a brand new technology that uses text messages to direct happy clients to your online review sites.
Zillow, Google, Facebook, and Yelp, and unhappy clients to a private survey, so businesses can win more customers. Try Rex today by going to www.meetrex.com.
Are you currently renting a home? Do you like paying someone else's mortgage payment? Why not explore the options to purchase your own home? Can you imagine a 30-year fixed-rate loan below 4.25% APR? This means with $10,500, you can purchase a $295,000 home and have a principal and interest payment of about $1,400 per month. What are you paying in rent? Does your family deserve the opportunity to take advantage of the current market? To learn more about these exciting opportunities, the Siegel Lending Team is standing by to speak with you. Call now, 1-800-306-1990. That's 1-800-306-1990. Or visit SiegelLendingTeam.com. That's SIEGEL LendingTeam.com. Or 1-800-306-1990. Rate subject to change without notice. Licensed by NMLS ID 217037 and 145502. Equal housing lender. Not endorsed or sponsored by any government agency.
Do you have a goal of mortgage-free home ownership? What if your home was valued at $500,000? Are you aware that a free and clear home could be costing you $2,500 every month, $30,000 per year? The mortgage planners at the Siegel Lending Team would like to show you how you can own your home, generate tax-free income, and accumulate family wealth. You simply need to call the Ron Siegel Team at 1-800-306-1990. That is 1-800-306-1990. By sending the team a copy of your most recent mortgage statement, the team will send you a no-obligation real estate plan. You be the judge if this is right for your family. Again, all you have to do is send the team a copy of your mortgage statement by email to reap@ronsiegelradio.com or call today. Ron Siegel, 1-800-306-1990. That is 1-800-306-1990.
Subject to change and without notice. Licensed by the California DOC and BRE/NMLS 217037 and 145502 and Cal BRE 01869452 and 1866775.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message. I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Good morning, Lisa. Good morning, Linda. Stuart, glad to see you with us. Sid, Samir, glad to see you. David is with us this morning. Glad to see you. Mercedes, glad to see you with us as well. We've got some great conversation going on this morning, and I'm going to tell you real quick, just so that I keep our sponsors happy, the Word on Wealth segment is brought to you by CreditSanitizer.com. You have a credit report, it's wrong, they all are. Credit Sanitizer can help you, and if you want to know the reasons, the only reasons to collect Social Security at age 62, tune in on Monday. I'll share that report with you at that time, because we've got too much good stuff to go over still with Kris Murray, Anaheim City Councilwoman, giving us the real scoop of what's going on. Too bad we can't go to our normal sources, right? The newspapers, we don't have one in Orange County anymore. I think they call it the Orange County Register, but it's so thin you can fold the Sunday paper in half. I don't know. The only reason I think people get it is maybe sports, but I'm not sure even of that part of it. The LA Times doesn't really cover news legitimately. You know, I talk a lot on my social media channels about fake news, and I get a lot of people talking to me and saying, how do you get that? And I said, just watch. You know, and I don't know too many people that want to take the time to, I mean, God bless people like Kris Murray and the others that want to go out and give their time to the communities. Have you ever sat and watched online? I sit sometimes, if I have absolutely nothing to do and I've got a big bottle of vodka, I will watch the city council meetings sometimes. They're pretty tough. I don't know how you sit there and do that, but you just listen to some of the things that are going on and you try and put them up. Here's the issue. Put them up to a smell test, right? I mean, you've got a partnership here where a piece of a puzzle is giving to business and a piece goes to the city, yet the city's giving away money. I don't get how that works, right? $267 million I heard on that town hall, and nobody challenges it, right? You wonder how that. Then you look and you say, okay, we got a 5-year growth plan based on building a hotel. We don't build the hotel, and nobody says, where's that money coming from?
Right. No, right? In fact, they say the opposite. They say, oh, great, we'll have $267 million. they're just making it up as they go. It's really unfortunate, and it's a disservice to residents.
Now, I know that the city, I know, and a lot of it is from what I've watched on some of these council meetings, under your guidance, they've been pretty fiscally responsible, or attempted to. Now, if they don't have this $267 million, they don't have it. It's not like you can give it away what you don't have.
That was a 20-year figure and a gross tax rebate on future dollars generated by visitors to our hotels. That is not bagged up and sitting in the basement at City Hall.
Right, so you can just look at the city balance sheet and see, okay, well, apparently there's $267 million extra there, so we can just look at that on the bottom line. It should be real simple.
I'd encourage that candidate and every other candidate to do their own homework, to stop listening to the people who recruited you, and, because if you trust the messenger, you can trust the message, and you're going to look like an idiot if you're wrong. So the city's finance director, city staff, there are numerous places online to go and get independently informed on the city's budget, and it would behoove every single person who's talking with residents to be truthful and to be informed, and they need to do a little homework. Otherwise, they don't deserve to hold public office.
So let me ask you this question. I want to do a little quick math with you, Kris. $267 million was over how many years?
20 years.
20 years, so that's about $13 million a year. Now, you mentioned earlier in the broadcast that Anaheim's one of the only cities that gives $5 million a year to public schools. Well, I guess that might be an area that we have to cut the budget on.
We're going to have to look at every dollar. I mean, a 5-year growth forecast was dependent on that hotel. That hotel's not happening. I'm not sure where that revenue is going to come from. But what residents truly need to know, the bottom line for Anaheim versus the 10 cities in Orange County looking at raising taxes, for 8 years, we've balanced our budget. We've restored cash reserves. We've reduced our pension liabilities by almost 12 to 15%, depending on the fluctuation of the PERS formulas. We've restored our police, our sworn personnel, to pre-recession levels. We've added additional firefighters and trucks and built a new firehouse. We've added 2 community centers and numerous city parks. We've restored library hours, and I can keep going, but that's off my hip.
Right.
So that doesn't happen by accident. It happens with good fiscal sound policy and private investment funding it. Our residents don't pay franchise fees, which is taxes on your cable bill. They don't pay utility taxes, and they don't pay a higher sales tax to provide all of that. It's coming through private investment. The worst you can say is that Anaheim cuts taxes on business to attract that investment. So you know what? If I'm a bad guy for cutting taxes, so be it. I'll take that all day long.
Absolutely. Now, there's another issue that I want to get to, and we only have about 2 or 3 minutes. What's the whole story with this needle exchange?
That is true insanity, and I don't say that helping those who are addicted with clean needles through a medically monitored program wouldn't be beneficial under some circumstances. But what the State Department of Health is authorizing in Anaheim, Santa Ana, Costa Mesa, and there may be a few other cities in Orange County, is what's called the Orange County Needle Exchange Program. It is a mobile program that will set up in our city parks during after-school hours and hand out, with no counseling services, no medical oversight, no testing for communicable diseases, and no true sort of capture of discarded needles, and no liability or coverage for those who might get stuck by a needle left in our parks by somebody who's used it and just thrown it on the ground. But the
so we might as well get rid of the parks.
Worst for me, no age limit. So if a kid asks for it, they're going to get it. If a minor asks for it, they're going to get it, and they're handing them out from 2 to 5 p.m. next to two city schools.
So if I want to go and buy a needle...
It's immoral, and it's just wrong. And so just for everyone's benefit, the County of Orange is suing the state. Anaheim and Costa Mesa and others have joined that suit. On Tuesday, I've asked for the city, as a charter city within our authority, to adopt an emergency moratorium to prevent it from setting up, because they want to start operating in September, right as our kids are back in school. And I'm just saying no, and I hope that I have the support of the City Council to approve that moratorium, because we have independent legal authority as a charter city. We did that with marijuana dispensaries as well that were overtaking our neighborhoods. We put a moratorium in place, and it has withstood any legal challenge, and I'm hoping that my colleagues will join me in supporting this on Tuesday.
It'd be sure nice, and if you have an opinion, let your council members know. I mean, we have Unfortunately, now we have districting, so your council member is responsible directly to you. So let them all know and go to Anaheim.net.
If residents or anybody who has concerns about these issues, because a lot of our economic issues benefit the county as a whole. There's a whole revenue stream out of Anaheim that goes to the county. So council@anaheim.net, COUNCIL@anaheim.net. Any communication sent to that email address will be distributed to the mayor and the full city council equally at the same time.
And we hope this time that they don't come and say that it's just what was the terminology that I heard last time, that it's just a political ploy when the citizens send messages there. Well, yeah, it is a political ploy. It's your jobs, council member. We want you to listen to what the community is saying, the residents are saying, and the voters are saying. I don't want, I can't even go to the drugstore and buy a package of needles without a prescription if I had diabetes. Right? But somebody can go to, my kids can be at the park playing.
Twice a week from 2 to 5 and get free needles.
And yeah, is that what you really want? I'm going to suggest, I don't have kids that are at the park right now, but if I did, I don't think I'd want them there.
Or how about the little ones who are going to be playing in the same sandboxes in the bathrooms where they're thrown on the ground by those who've used them and just tossed them on the ground?
Right, because you mentioned that there's no collection process there.
Well, they provide collection when they're there, but there's no collection when they're not, and there's no requirement to return them.
So it's not a trade one and get one?
No, in fact, you could take 20 and bring one back and get 20 more.
Oh, you gotta wonder where the logic is with some of our elected officials. It's enough to drive us all to drink, but unfortunately we can only talk about it for so long. Now it's up to you to decide. Do you want to get involved? Do you want to take your city? I listen to one of my favorite programs. It says, "Take your country back again" is the motto of the program. How about take your city back? Just a thought for you, and make sure you set that first radio preset button to come back here every day to join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to Kris Murray for coming in and sharing with us. We appreciate your insights so we have a little better knowledge of what's going on in our city. Thanks to all of our sponsors. A big thanks to Steve, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Bye, everyone.
I could call him something. I think I'll just call it a day. Pour me something tall and strong.